Hi everyone, welcome back to Be Rich. In our continuing series on evaluation, how evaluations are done, I thought today we will touch upon the Indian unicorns and how evaluations been going for them since the highs of the COVID times. I thought we'll talk about Indian startups and the Indian unicorns and how they're doing. And Shashwath has found a very nice article which we'll share the link for in the comments below, which if you have access, you can try and read about it. Otherwise, we will be walking through that article anyways in our video, so you'll get to know really what the article is about. So, Shashwat, why don't you talk to us about the article?
Right. So this is a topic we've discussed before and discussed before outside of the channel. Not something which we've discussed on the channel as much, but we have discussed in the past venture capital VC companies and your startups, unicorns in India separately, Zomato, Nykaa, and stuff. And there have been multiple articles in the Hindu which I've written with my other uncle on the topic. But basically, the article summarizes what we've been talking about. So the article has a lot of statistics, which is why we refer to the articles. And this is no way just a summary of the article, but rather a larger macroeconomic scenario. So coming to the point, the macroeconomic scenario in 2020, 2021 was that due to the COVID shock, what central banks had done was because there's massive panic and the stock market's corrected and a correcting stock market never bodes well for an economy because your output has declined and your stock market is now correcting, which means that wealth levels go down, consumption goes down, and your GDP goes down. So, and that's what happened with a lot of economies. And we saw India, especially in that quarter, went down by over 23%, if I'm not wrong. So, we suffered a deep recession. And in response, the Federal Reserve said, let's pump the brakes, let's hit the accelerate pedal now, and let's do quantitative easing. Let's buy out a lot of your corporate bonds. So this was unprecedented because they were buying corporate bonds, high rated corporate bonds as well. They were basically saving a sinking ship. So with the Federal Reserve giving printing money left, right, and center and engaging in quantitative easing, what ended up happening was there was a lot of loose money, and there was a lot of money chasing too few goods, which is why you saw a lot of inflation and production had also come down. So you basically saw prices soaring because people also expected inflation. So what they did was, oh, tomorrow the same packet of milk is going to be more expensive. So what I'm going to do is I'm going to stock up today. But that mentality, when followed by the entire mass, basically is a self-fulfilling prophecy and drives up inflation. And that's what we saw happening with a lot of loose money. And people also started earning more in terms of wages through wage price inflation. And now people weren't allowed to go and watch theaters, movie theaters, or travel. So a lot of it was going towards savings because people don't know what to do with that money. And what ended up happening was that interest rates are now at 0%, some in some countries negative, and a lot of savings. What do people do with that money? What people do end up doing with that money is throw it in the bank, get whatever minimal amount of interest you get. And what banks do in turn is lend it out for dirt cheap interest rates. And banks did lend it out, and private banks also had a lot of savings from wealthy individuals who wanted to invest in high growth opportunities because your treasury yield wasn't giving you too much of a return because of the 0% interest rate. And what ended up happening was you saw your unicorns, which are companies marketing technology, which was seen as the sort of savior of during COVID-19. You saw Swiggy, Zomato, Ola, all these services being hailed as the sort of savior during the time when people couldn't leave their houses. So you saw a huge rally in these companies in the VC world. And what ended up happening was that a lot of these companies from 2019 to 2022 had a huge uptick in their valuations. So your Byju's, your Unacademy, your cryptocurrency boom was also going on then because there's a lot of loose money. So if you recall the 2021 IPL, you would have seen a lot of cryptocurrency ads saying cryptocurrency is safe. This is great. I've made a lot of money on cryptocurrency, and all those startups, Kuber Coin, and all those things came into the picture. And you basically, in every street, you saw someone adopting some startup and it being termed as a unicorn. And what the article tells you was that over 60 unicorns were created with valued at $1 billion just in the year from the year 2021 to 2022, and that's a huge amount. And Baiju, and now with the Federal Reserve saying, okay, maybe we've accelerated too much. Inflation isn't transitory. We need to step off the gas pedal and put the brake. So they started increasing interest rates over the past year. And what we've seen is a lot of these guys who've been minting free money are now suddenly facing the crunch of increasing interest on their loans. So they're not able to fund their loans as much. And now they're demanding that these tech companies start pumping out some cash, because you can't just keep making a loss. You can't be a loss making company and keep churning cash. And that is intaking cash. You're just eating up cash pretty much. And that's something which you can't do in an economy where you have real interest rates which are positive. That is, your interest rate minus your inflation rate is positive. That basically means you can't keep burning cash like that. So you saw Byju's, which was valued at $22 billion at its height, has now come down to $11.5 billion. That's a 50% haircut in its price. That's a huge amount. And people who did invest in Byju's as VCs in the later rounds are now facing the brunt of this cut in valuation. And another company, Swiggy, which is something which all of us do use to some capacity at least, has gone down from, and this was the gold standard in terms of COVID-19, because this was seen as a startup which would greatly benefit Swiggy and Zomato. And this startup from 2019 to 2022 has come down to 10 from $10.7 billion has come down to $5.5 billion. And Vanguard has cut down Ola's valuation, which was considered an innovative company, by 35% to $4.8 billion, a 35% haircut. And Pine Labs, a company which Neuberger Berman had now cut down the valuation by 40% to $3.1 billion. And these numbers will be up on screen if you want to pause and take a look at them. And PharmEasy's valuation, which is a company which delivers medicine to your house if you put it up on their website. I think NetMeds is also another one of these companies, but PharmEasy in specific has been valued at $2.8 billion by Janice Henderson, and that's also a huge haircut in its valuation. So that's basically where these startups are at, and I want to pick your brains on what you think is the future of these startups.
Well, when you talked about Farm Easy, I was remembering 1MG, which Tata bought, Big Basket,
Yeah.
which Tata has bought, and Big Basket is struggling. 1MG is struggling. Thankfully, they are now Tata companies, and Tatas have
Yes.
huge reserves of money. So they don't have a problem in terms of funding, but where they will have problems is being profitable. Tatas will be very aggressive in loss making companies, and they like to see loss making turned into profit making. So these companies
Yes.
also, which have been taken over, will also be suffering huge haircuts internally by layoffs in advertising budgets, in whatever promotions they're running. The fundamental problem, which the article nicely highlights, is a product like Zomato, a product like Swiggy, a product like Uber Eats are all the same. If you look at it, the
Yes.
net the same. They offer you a service of bringing food to your house. So how do
Correct.
they compete against each other? What they did was they took all this free VC money which was coming in, and they used it in promotions by giving discounts. Each one competing with the other one, giving discounts. Basically, doling out cash.
Yeah.
It's like giving you free cash to use a service. You're not actually
Yes.
ordering the food anymore. You don't care about the restaurant anymore. You start looking at Zomato price and Swiggy price and Uber Eats price. You'd be comparing as a consumer. You say, okay, who's offering me the most cash back? Basically, who's
Yeah.
paying me money to use this app? So that was what
Yes.
was happening over the last 2 years, and all that has disappeared. India has a long history, and this is not only in India, throughout the Asian region, where we want free things. We love
Yes.
free. You see it in our politics. You see it
Yeah.
now. Problem in the business sector is this: instead of
Yeah.
wanting a quality product, a quality service, and be willing to pay a premium for this quality, you know let's say I want to be respected. I want to be treated like being treated like we are part of a private banking. Yesterday's or a
Yeah.
couple of videos back which we talked about, you don't want to be treated
Yes.
like a private equity banker. You rather be with the janta as long as you're giving it to me free. The
Yeah.
most important thing is free in India. So that is what's been burning these guys. They're not able to take their money and not be prudent in their spending and prudent in their investing, and try to create a product which is more of offering more in terms of differentiation between their competitors, focusing on that and offering a better class product. They've been offering things for free, and those days are over. Like you rightly said, Fed interest rates have shot up. Money is fleeing India, fleeing the world, running back to the US, strengthening the
US,
dollar.
yes,
Yeah. So all these guys who are venture capitalists who had a lot of free cash in their hand, they don't have free cash in their hand anymore. They don't have money to throw. If for anything they want their money to come back, they want to close their loans because treasury
exactly.
yields have gone up. So you rather buy a treasury yield now than throw it into some unicorn in middle of a third world country and hope it does something for you because
Yeah,
your treasury yield itself is offering some great returns for you. If you take the dollar
exactly.
conversion out into equation, and it's a safer bet. The American government is always a safer bet compared to
And they
some
even
unicorn
passed
cities.
the deal for the debt ceiling as well.
Correct.
Yeah,
So now as Warren Buffett and Seth MacLaren, everyone's been saying the tide is starting to go, and all these
yeah.
unicorns, you can see them. They just had unicorn on top. The rest of it is all pretty much a donkey below. It's a donkey with a unicorn stuck to its forehead, and everyone's like wondering now what to do. Yes, it
Yeah,
is very
and
sad because it doesn't speak well for the Indian economy. It doesn't speak
yeah,
well for the situation of the youth, where most of these guys are gig workers, don't have a proper education, don't have proper skill training. They do not have anything to fall back on. They all just
interestingly,
assume
the
they can.
the exact point which you're talking about is supported by statistics because very recently, what information has come out is that the youth unemployment rate it's the highest compared to even countries like Bangladesh, which were lagging behind us, and our youth unemployment rate is now above 20%. That is 20% of all our youth is are not able to find jobs anymore. So yeah, it's supporting what you're saying.
Yeah, and what happened was these unicorn companies encouraged our youth, saying right after school, you don't need a college, you don't need further education, you just become a
Yes.
gig worker. You'll get paid 30,000, and with incentives, this that you can make 40, 50,000 rupees. Being a Uber driver, being a Swiggy delivery guy, you do
They'll
this part time,
subsidize your
invest.
bike and stuff.
Yeah,
Yeah.
yeah, invest part time, work part time. You make a lot of money, then you invest it, and then you can just retire in 10 years' time with a whole lot of money. Now all that is evaporated. All these guys are saying sorry, 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 and they're sacking these guys. Now there's a
Yeah.
huge segment of our society who are not employable because they have not been skilled. Now you have to
Yes.
reskill all of them. Who's going to reskill it? The government doesn't seem to be wanting to pick this up. The private sector doesn't want to seem to pick this up. So who's going to? So we have a huge social economic problem happening, and it's ballooning, rapidly ballooning in India. These are just some of the small fallouts. Now, if you take into consideration the economies which are leaning on this, your food vendors, your cleaning services, your cab
Yes.
pickup drop, all this, and your house rental, all these flats which are being built in the outer
Yeah.
city, all these properties which are up for sale, which are all being picked up by these young guys, all of this are now coming into play. If you take all this, the broader economy, the shockwaves are immense. And all of these guys have got loans, bike loans, credit card loans, personal loans. They've
Yeah.
been on a spending binge they've been on. So where does this all go? I really don't know. It is rather scary. This article paints just a picture of one small sector, which are just the unicorns. And these are the
Yes.
unicorns which we talk about a lot, which is the Swiggy, the Zomatos, the
Farm
Olas,
easy and all this.
yeah, Farm Easy and all these guys. Now, if you open that balloon up and you look at all the other smaller unicorns, we are in a deep trouble. And I don't know what the solution is for this. To be very
Yeah.
honest, usually we'll talk about some kind of a solution to a problem. The solution to this is like what Anand Mama has been saying is going to be a hard landing. You know,
Yeah.
we have to really rework and rethink how our society works, how we, pay our people, how we reward our people, and this bill will finally come to the Indian public. The Indian tax-paying
Yes.
public will have to foot the bill. Sadly, as it is, there is no other option. The Indian government has to come up with some kind of a welfare scheme, some kind of a
Social
rehiring,
security net.
yeah, some kind of a rehiring, retooling program it has to come out with, where at least some of this mass of these people can be absorbed and refitted and retooled and put into society to provide some kind of vocation for these guys. I don't know what it will be because the way advertising and things have sold to these guys, it's so skewed. People find it very hard. They think it's beneath them to be a plumber, beneath them to be a carpenter, you know
Yeah.
yeah, so to reimagine all this, to see all this coming out of this. It's going to be a very painful, long few years. And I don't know. It's going to be tough times. This is just, I'm talking
And
about the youth.
yeah,
And if we expand this on to people at my age, these guys, at least the youth can be refitted, retooled, or whatever you want to call it. Guys
yeah.
in my age who are pushing well past 40, closer to 50, we are well past the time where we can be reskilled and, relearning something. And these guys are in a worse situation. They're married with a couple of kids in school. So it's tough times. But these are the
And
consequences of a spending binge. When you have a long period of 10, 12 years, 20 years of free money floating around, this is what happens.
and for the larger economy as well, because what you had basically described is going to be a huge downtick in consumption. So what's going to end up happening is that your if the government doesn't step in now, what will end up happening is your GDP growth rate, which is already like crawling and limping, is going to take a big hit. And I wonder whether the government can afford to take such a big hit because they're already limping. It's not like you're in a super fast Ferrari which is driving at 12% growth rate per year. You're driving at about 4 5 if you're very generous. And you take a massive hit in the bottom line. And you're basically saying that this entire section of the youth are going to be unemployable and there's like a lost generation almost. And you already have a sort of lost generation with what Raghram Rajan described as those kids who couldn't get schooling for 2 years, and now they're like 4 years behind because they have to catch up on what they've done and the 2 years after COVID, which they weren't able to attend very well. So you basically have a huge generational gap where you have the generation above these two generations, which is doing okay, and then you have the generation below, which is going to do okay. But then you have a slice of it who are entering into adulthood or just have entered into adulthood who aren't going to be able to support the economy as much. So you're going to have a huge problem in the next coming decade at least.
Absolutely right. So now let's say we are an investing channel. So this is all okay, great, Shashwath and great Vinod. Thanks for telling us something. We're painting a gloomy picture. Now, what do we do as investors? This is a question
Yes.
most of our viewers are thinking. Okay, we're not a political channel, nor do we have any political views on this. So, moving forward, as investors, what are your options? Well, your options are one, hold on to cash. If you can keep yourself in cash, keep yourself as cash. Two, get rid of all your loans. If you do have any loans of any sort, get rid of them because we can't see where this is going. So you want to be light and nimble. The best way to be light and nimble is not to have any kind of debt.
Debt.
Get rid of all your debt. And the third thing, if you are ready to invest and you do want to invest, keen on investing, invest on classic sectors, sectors
Yes.
which are like bread and butter
Evergreen.
sectors, brick and mortar sectors.
Yeah.
These will always survive shock waves after shock waves because these are basically what human beings need to survive. You need food, you need water, you need electricity, you need transportation, you need a house to
Yes.
stay in. So these things are fundamental as a human being you need. They will never go away. And these are the safest places where you can sit in as an investor right now. I don't know even if financial instruments are safe now to sit in. I don't know. Other than sitting in liquid cash, I would not venture, to be
Yeah.
very honest, at least for a couple of more months to see where it
Where
is
it's
all
headed.
heading. Yeah, because geopolitically also things are quite
Not very stable.
okay. Yeah, yeah. It's not 1 minute people are blowing very hot, next people are blowing very cold. So you don't know. Push comes to shove, people seem to be using some common sense, like the debt ceiling which got passed. Everyone said we don't know till it happens. But most people are saying, but it will happen. But you
Happen.
never
Yeah.
know because we live in an environment right now. Anything is possible.
Yeah.
We never thought Russia would walk into Ukraine. Everybody kept saying, all the analysts, no, no, he will not do it. He'll bring the
It's just a
army
fear
right to the
monger.
border. Yeah, he'll bring the army just saber rattling, and then he just cross the border. So same way with now US and NATO, we're saying no, no, they'll only be helping Ukraine. We're saying, but now all bets are off.
Well,
I don't know.
ac-
With
according to according to Putin, he's still not crossed the border. He's still in Russian territory conducting military exercises.
Correct. Same way now with China, the Chinese president seems to be telling his National Security Council, be prepared for the worst.
Yeah.
So that is such a vague statement. What do you mean by the worst?
Worst.
In my
Yeah.
book, the worst is ending of the planet. That is the worst. So, I mean, I don't know. So, when you take all that into consideration, I would say invest in things you know, invest in things which are close to you. Don't
Yes.
be, too adventurous in your investing. America is
U.S.
always,
Treasuries. U.S.
yeah,
Treasuries are a great avenue right now with the interest rate hike.
yeah, and all American stocks and American companies are safe because
Yeah.
America is the strongest democracy right now in the world. If the American democracy starts failing, then we have big problems across the globe. Then we are really in for a tailspin. You know,
Yes.
it's
The
like one of those
worst.
long cycles. Yeah, Dalio keeps talking about. Are we Ray Dalio saying, are we reached one of those long cycles? I don't know. It always sounds like we're reaching a long cycle, then we don't have a cycle. So the
Cycle. Yeah.
people always think we are doomsayers, we are doom preppers, as they call it in financial sector. But I'm not. I'd rather be cautious than be caught with my sitting on a donkey with a unicorn stuck to its forehead. So that said, what are your conclusions, Shashwat? What do you feel about what I said?
Yeah, no, I definitely agree with what you have to say, and to people who say that we're too conservative, again, this is what Nicholas Nassim Taleb said. He basically said, Russian roulette is all fun and games, but you wouldn't play 10 games of Russian roulette because
Yes,
you'd rather pay to get out of Russian roulette than to actually play the game to get paid. So the idea
correct.
is that you don't want to get shot, and it doesn't
Yeah,
matter because if your probability expectation tells you that you have $1 million to make, if even in one of those outcomes your outcome is to like get finished out, wiped out completely, that's not a game you want to play. Even if it's a
correct.
1% chance, do not play that game. And that's basically what we're advising. We're saying that, stay in cash and stay nimble, so you're able to always escape whatever scenario which is getting thrown at you. And it's always better to play another day. As
Agree.
Yeah.
On that note, I think we can conclude today's video. We would like to thank you for joining us today on Be Rich. It has been a very interesting article Shashwat brought to us. I hope it gave you some insight into where we are economically, globally, and what we, as investors, small retail investors, what we think, where we think we should have money, we should be put, and what we think is safe places to be. Anyway, thank you again today for joining us on Be Rich. Please do subscribe to our channel. If this is a kind of video you like, please do share it with your friends and family if you think they would also be interested. Turn on the bell notification icon so every time we come up with a new video or a new content, you'll be alerted to it. Again, I'd like to thank you again for joining us today on Be Rich.
And just a note that again, we're not SEBI advisors and none of this is investment
Yes,
advice.
very, very important. The caveat
Yeah.
being we're not advisors, we're not paid participants of anything. These are just our hobby. We are just hobby investors. And these are our views and what we think, and we're just sharing it. It's just a pure conversation. That's all it is. If it gives you value, we're more than happy to continue doing this. Thank you.
Thank you.
I will be in Kuala Lumpur, Malaysia on the 11th of June this year. That is a Sunday. I want to meet you guys at Sheraton Imperial Hotel between 4 p.m. and 7 p.m. on that day. The Sheraton Imperial Hotel is in Jalan Sultan Ismail area near Quill City Mall. The Kuala Lumpur monorail railway station is available nearby. You can meet me there. For further details, you can contact us on the WhatsApp number below or send us an email at the email given below. My team will contact you at the earliest. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.